Hello, everyone. My name's Mark. I'm the stock market jobber. Welcome to our daily SPY commentary. So, a lot going on today, and some of it seems kind of ridiculous, frankly. Things are getting pretty overextended. Um, for our stock of the day, check back in a little while. We're going to talk about Facebook, which is acting unusual, right? I mean, it's up big, but the numbers to me really look pretty bad. I mean, they missed their earnings by a lot. But that's having a big influence on SPY. So anyway, my name is Mark. I'm the stock market jobber. I'm a former institutional trader. I was the head of trading at three different institutional money managers, and I oversaw all kinds of different strategies, hedge fund strategies, mutual fund strategies. I traded directly for Mario Gabelli. I traded directly for Steve Cohen. Those are two of the best in the industry. Allegedly, the show Billions is based on Steve Cohen, and I always get asked all the time, is it realistic? And the answer is I don't know because I've never seen it. So sorry to disappoint you with that. Um, but anyway, let's just look at SPY here and let's just cover two things. Now, this could be a potential breakout, right? What is a breakout? Well, what is resistance? Resistance is a large group of investors who are looking to sell their shares at or close to the same price. In this example, this black line here is 410. Now, when a market is trending higher, it's because there's not enough supply or sell orders to fill all of the demand or buy orders. So buyers are forced to be willing to pay a premium if they want to get shares. That forces the stock into an uptrend. When we get to a resistance level, there is more supply or shares for sale than there is demand or shares to be bought. So this is why things stop going up when they hit resistance. And a lot of times when we get to resistance, we get a decent sized sell order or a sell off right after. That's because some of the sellers who are at the resistance level, or I should say the investors who are at the resistance level with their sell orders, start to get worried. They start to think, you know what? Seems like there's other sellers around. That's why the stock is, or in this case, the ETF has stopped going higher. So if I want to sell, I have to reduce my price a little bit. I want to get out ahead of these people. In other words, if I'm at 411 and someone's at 410, well, no one's going to come buy it from me because there's a lower price. So I might go down to offer my shares at 409. Someone else sees me and they say, you know what? I'm going to lower my price to 408 because if you want to sell, you got to be the lowest price in town. No one's going to pay more. No one's going to pay you more than if there's some, or no one's going to pay you if there's someone else who's willing to sell the shares lower. So a lot of times when we get up to resistance, we have sell-offs right after, and we can see that. Now the tide is turned here. This could be a potential breakout. A breakout is when something trades above a resistance level. And this isn't just symbolic. It could mean that the investors who created the resistance with their sell orders have left the market. Maybe they cancel their orders, maybe they finish their orders, but regardless, they're out of the way. So anytime you take supply off of a market, it's just basic economics 101. It sets the tide for a move higher. But that being said, we're very overbought. Overbought refers to a stock's momentum. And momentum is how far has it moved in a given time period. And when we get to um, above what would be its typical or historical or typical usual, sorry, I double said that, but its usual or typical or historical range, we call that overbought. And that's important because these overbought conditions will be bringing sellers into the market. They are going to be expecting a reversion to the mean or a reversion to the average. Now, this indicator down here is what we call the RSI indicator. And if the blue line gets above the red line, it indicates overbought conditions. And look what happened the last time we got this overbought. It was right before a big sell-off. Now we're getting close to being at the same levels. So these are just a couple things to watch. If we reverse and we want to see if this 410 level becomes support. One of the characteristics of a market going higher is that levels that were resistance can turn into support. And we could actually see that here. Notice how this resistance level became support here and here. When resistance turns into support, a lot of times it sets the stage for a move higher. Why does this happen? Well, it happens because of seller's remorse. There are people who sold, and now that the shares are higher, they regret doing so, and they tell themselves, I'm going to buy my shares back. But I'm only going to do so if I get them for the same price I sold them at. So it's not unusual when something breaks a resistance level for it to come back and to what we call consolidate. And if over the next few days we come back in, and my suspicion is we probably will because it's just so overbought. If this support converts into resistance, if this resistance converts into support, that could set the stage for another move higher like it did back here and it did back here. All right, everybody, thank you so much for checking in. Be sure you subscribe to our YouTube page here, Stock Market Jobber, or check out our website, stockmarketjobber.com. And I will be speaking with you soon. Thank you, everybody.